Broadcast is now starting. All attendees are in listen-only mode.
Welcome traders to today's presentation on how you can start cashing in on the current post-COVID economic explosion. It's already happening in the markets. You'll see it everything from a 1-minute chart to a daily chart. I'd like to thank you for taking time out to join me this evening. My name's Michael Guess, and I'm going to go ahead and show you how you can take what you're doing with subjective discretionary trading, which is full of uncertainty, and replace it with totally consistent, precise winning results. Before we get started, I want to make sure you can ask any question you want and that you know how to do that. If you'll look in the top right corner of your main monitor, you will see that little vertical strip that's above everything else. That's the GoToWebinar control panel. If you will, click on the topmost button. It should be yellow and have a left pointing arrow. When you click on it once, it'll slide over to the left and it'll reveal a hidden window, and that's where you type your questions. So would you please just type something in there? Let me know that you can see and hear what I'm showing you. I need your feedback to make sure that you are able to see and hear what I'm doing. Thank you, Dave. I really appreciate that. So, I already mentioned that my name is Michael Guess, and I'm going to introduce myself to you again. That's me. And I want you to know what you can expect during this presentation. This isn't just going to be a dog and pony show. I want you to know why this tool can help you get your slice of the action. So, what's coming? Well, first of all, the economy is revving up. In fact, we're almost going into inflation. It's going so fast, people are flush with cash. They've got all that money. They are spending like crazy. All this is also due to the fact that the businesses are trying to play catch up. And so they're revving up also. You can see this in the stock market. You can see it everywhere. So we've got a lot of pent-up spending pressure. So this is really the time to catch that big trading opportunity. It happens not just once a week, twice a week. It happens multiple times each and every day. And why am I qualified to say these things? Well, I've been a professional trader now for over a quarter of a century. That makes me ancient. But I founded TradeSafe more than 20 years ago. Along the way, I've graduated about 4,000 students successfully, and I've created a host of custom indicators, developed multiple mechanical trading systems, but I'm just going to share one of them with you this evening. And that's going to be the TradeSafe mechanical trading system. I'll explain what it means, what you can expect from it, and how very easy it is to achieve real consistent results. So, yes, I've developed mechanical trading systems. You're going to be introduced to the TradeSafe system. But before I even discovered trading, long ago, I was a psychotherapist. And I was what in today's parlance you call a performance coach. I wasn't in the business of fixing broken people. I was in the business of helping people excel. So I work with a lot of big names in the business and help them reach their goals. I take that and apply that not only to the system, but also to the coaching that you get along with the system so that you won't have any barriers between achieving those goals. Okay? So I was a trading specialist in what I would call a past life. Now, some of you may be wondering, okay, I'm not sure if I'm going to be able to stick around. I hope you, by the way, prefer this later this evening time. Just out of curiosity, I'm going to ask you, when we've done presentations in the past, they've been right after the market closed in the afternoon. But some of the people that were communicating to me, they said, hey, it would be a little easier on a lot of us, because some of us have some jobs, if we could do it maybe after supper or something like that in the evening. Do you prefer the evening, or do you like the afternoon better? Would you type that out? Give me a little bit of feedback. Much better for you, Noel. Okay, got it. All right, that's one person's feedback. Anybody else have a preference one way or the other? Do you like the evening better? Either way is good for Benjamin. Okay, that's great. This time is good, says Dave. All right, I will keep working from this time slot in the future. And by the way, we are going to be updating and adding additional new material so that the next time you see me, we're going to have a lot new things to share with you. But let's keep going. I want you to know, in case you can't stick around for the rest of the evening, I'm recording this, and Murphy's Law notwithstanding, it will be properly processed, uploaded to the archives, and you're going to get an email later this evening with a link to watch the replay at your convenience. That way, even if you did stick around, you may want to review it. You may want to say, okay, what was he saying about this or that? I want to take a closer look and listen. So you will get that. Plus, as a bonus for you joining us this evening, you're going to have access to a free ebook on trading that I'm going to share with you. So some of you are very good at typing those questions and comments. I appreciate it. Keep them coming. But others, maybe you're a little bit shy, or maybe you just don't think of the question until after we're all done. Guess what? You can actually ask me anything you want, and you can do it on the phone instead of typing. No, it won't be a sales call. I don't do that. I never have done that. Instead, what I'm going to do is just make it what I would call a diagnostic consultation. Kind of like when I was a psychotherapist, I help people diagnose issues and problems. Well, I can help you diagnose what might be breakdowns in your trading. Even if you're not interested in TradeSafe itself, I'm more than happy to do that. No strings attached. But I am inviting you to schedule time with me. I'll give you a full hour of my time. You won't be talking to a salesperson. And you'll see the calendar. You'll be able to pick the best date and time that works for you. So keep an eye out for that email. It'll have a link to it. Okay? Now, before we dive in, I'm going to fulfill what the Federal Trade Commission says. There's the people that run the internet, and they say, okay, nobody's allowed to make any kind of promises or guarantees about outcomes. Now, this has nothing to do with trading. It could be weight loss or anything else. So that's the law, and I'm not going to break that. But I will share with you how we achieved our own track record and what I personally believe you can expect. And I'll share with you what my students have been achieving with their own trading. So with that being said, let's go ahead and dive right in. So I said at the beginning, this is the post-COVID surge. How can you take advantage of it? What are we going to learn here this evening? Well, first of all, I want to introduce you after this to what I consider the optimum trading tool to give you the very best results. You'll be in full control, and this is a tool that will be automated. Now, you still get to pull the trigger and say no to the trades, but it is automated so that once you're in the trade, you don't have to worry about how to get out and what to do and all those things that bring inconsistency to your trading. I'm also going to show you that with the TradeSafe system, you don't need a massively large account. Now, first of all, I need to make a distinction. I know some of you may not know what this is aimed at. Is there a target audience? This is a trend following system, first of all, and this is a day trading system. So you may say, oh, well, I don't have time for that, or I've tried it, I didn't like it, or I got a job, I can't possibly day trade. Guess what? I can actually show you that yes, you can day trade even if you have a job. I've had many people do that. You can pick the time that you want to do it. Secondly, you do not need to have a big account. If you're a position trader, you know you have to have a really large account in order to have the margin requirements. So if you are position trading stocks, for example, swing trading, that sort of thing, it takes many thousands of dollars to open and maintain that type of account. And even if you day trade the stock market, it still takes a lot of money. It takes over $25,000 just to open a day trading account, because that's the law. They require that. I'm going to introduce you to how you could trade with as little as a $5,000 account and start pulling in 2 to 4% a day. That's right. So stay tuned. And in order to do that, I want to also reassure you that you will be able to completely eliminate all the doubt about, am I entering at the right perfect place on this trade? Because a lot of people, they say, oh yeah, when the moving averages cross or the stochastic gets out of oversold. You know what? Those are very subjective things, because I could get a bunch of traders together and you know what? I would have different entries from each and every one of them, because everybody's got their own notion about what that exact spot means. You won't have that with a TradeSafe system because it's a true Boolean logic. That means black and white, no shades of gray system. And why are the exits completely doubt-free? Because they're automated. You don't have to lift a finger. If you're day trading at all and you've had any experience, you know that sometimes things just move too darn fast for you to keep up with. Well, if it's automated, it's done for you by the programming. And I'll show you that with an actual trade. We're going to use real charts and I'll demonstrate it to you. Plus, nobody wants to lose their shirt when they take a trade. You'll be able to keep your risk under very tight control. If you were trading something like the indexes, for example, like the Dow or the NASDAQ or the Russell, just as an example, the most that you could lose if you were trading them, because they're contracts rather than stocks, for example, they would live in the world of futures and commodities. The most you can lose is $100 per contract. Typically, it's around 70 or less. So we're going to keep that risk under very tight control. And no, you will not get stopped out frequently, because every single one of my students that graduated from my program in the last few years has achieved at least 87% winning trades. They did it all by themselves. I wasn't hand-holding them or anything. So there's your reassurance that having really tight stops doesn't mean you're going to always be stopped out. So if you've got questions along the way, feel free to keep typing. You don't have to wait for me to stop talking, because I won't. Last of all, I do want you to know that getting into a trade, that's the only time that you will have to make an executive decision. You're the one who's in control and says yes or no to whether you like the signal, because it's clear-cut signals. I already told you that. This is Boolean logic. Every single step along the way, and there's only 4 steps, is totally clear-cut. And even with that, if you don't like it for whatever reason, because I don't know what your personality is, maybe you're kind of conservative. On the other hand, maybe you're a very aggressive trader and you jump on anything that moves that's a setup. Well, you're in full control. But once you're in it, like I said, the exits are fully automated. You'll see that when we go to the exit strategies in our trades. And I promised you already, at least 8 out of 10 winning trades. And I'll show you how and why I can give you that assurance. Well, let's circle back to this concept, the bigger picture of part-time trading. A lot of people just have mistaken notions about day trading. They think that, oh, you got to sit on your butt all day and get hemorrhoids and eye strain, and it's just not attractive at all. Well, guess what? With the TradeSafe system, you don't have to be stuck there all day and stare at your screen. Part-time trading is truly possible, and it's because, just like that camcorder on the right, it has a zoom lens. We're going to show you this evening how you can use multiple chart settings instead of a one-size-fits-all single chart to take a trade. We're going to use different chart settings to give you the equivalent of a wide angle lens so that you know what the big picture is for the current trading day. As you zoom in a bit further, you'd have a smaller setting on your chart. And you finally zoom all the way in when you're ready to take a trade. And that's where you have that low risk surgical entry, as I call it. So this zooming out and zooming in isn't going to be possible with just any old chart settings. A lot of you are currently using what I would call euphemistically amateur software. And that's no disrespect, but that's what E-Trade and TD Ameritrade and Thinkorswim and others provide. They are giving software for the average retail trader. What I'm doing is I'm putting in your hands a professional tool. Because as we say in Texas, don't take a knife into a gunfight. And I live in Austin, Texas, so that's why I'm qualified to say that. So this business of being able to dial in the precise, exact settings for your charts is possible only with professional grade software. So I wrote my system for the platform that's called NinjaTrader. Has anybody ever heard of it or currently using it? If you've either used it or heard of it, would you type a yes real quick? Just give me a little feedback. Otherwise, I want you to know it is a really simple platform to use, but it has a lot of horsepower under the hood, and it enabled me to do some serious programming to automate my system. Yep, Dave uses it, so he understands. So all of this allows you to adapt, because here's the thing. A lot of people assume that all markets are alike and you can buy something off the shelf to trade a given market and it'll be the same no matter what you do. Well, you and I have personalities, so do markets, and not every piece of software is going to work that well. So I'm going to show you how to get the right combination to extract that profit from the market, just like the professionals do. So let's start with something called ratios. See those three charts there? That's the same market, but with three different, call it magnifications. They're just different settings. One's a larger time frame setting, the one on the left, and it just started a downtrend. If we zoomed in, say 300%, that's the middle chart. I would call that's the one that has a dominant cycle. The one on the left will give you a sense of what's the trend for a half of the day and maybe even the whole day. The one in the middle is going to show you the trend possibilities and follow through for about an hour or two. And then when you are getting the conditions for a setup, you want to use that last chart on the right. That's the one that has the smallest setting, the low risk surgical entry setting. That way, you will be able to make the most money with the least amount of risk. This allows you to avoid using a single chart because that's just a one-size-fits-all approach. That's what amateurs do. So I'm trying to wean you away from that concept, and I'm going to give you some of these tools that are in my system tonight. I'm going to show you the settings, how to achieve them, and you can do that as best you can with whatever software you currently have, unless you have something that allows you to dial it in like I'm going to show you. But this will enable you to, regardless of the market, find the optimum settings for your charts. So this means you'll be able to tailor your charts for the strength of the trend. Just like if you buy a suit off the rack, well, it's kind of a generic fit. It may fit you pretty well, but in some places it's too loose, other places a little too tight. But if you went to a tailor and they bespoked it, as the term goes, they would make that suit fit you like a glove. We want you to be able to achieve the same thing with chart settings for each specific market. Because once you do that, you will be able to know precisely what the market is capable of giving you before you get into a trade. You will know what the odds are for follow through. And that means you will be able to know the best way to manage and exit the trade. So let's start. I'm going to use as an example, I already mentioned the indexes like the Dow, the NASDAQ, and the Russell. In the world of trading, they live in futures and commodities, and their nickname are called the minis, M-I-N-I-S. That's because they're the small version or electronic version of what's traded in the pits. Okay? Keep in mind, even though I'm pointing out something that happens to be in the world of futures and commodities for this example, that doesn't mean that this system is just for that. It works on the stock market. I just happen to believe the stock market is got the deck stacked against you, but I'm not going to take up your time trying to explain that this evening. If you would like to know why the stock market is so inconsistent and difficult to day trade, schedule some time with me and I'd be happy to share that with you. So let's come back to this. How do we achieve the chart settings? Well, we want to start with a daily chart, but we don't want that drop-down menu select daily from the menu because it's actually not accurate. You want to build that chart out of raw minutes from when the open starts to when the close in the afternoon is done. And you subtract the number of minutes from the open to the close. Now for the minis, that's 405 minutes. That's a starting point. That's your master number. And then after that, you want to pick smaller and smaller numbers. You want the biggest possible number or integer that'll divide into 405 without any remainder or leftover. And keep going, smaller and smaller and smaller. Here are some of those numbers. The next biggest number is 135, too big for day trading. 81, still too big for day trading. 27, still too big for day trading. But notice that 27 and the 81, they divide into 405 just fine, but they also have a 3-to-1 ratio. That's where the zoom lens effect comes in. Wide angle, and then the middle setting for dominant cycle, and the smallest setting for your low risk surgical entry. So we're going to take those and continue on from a 27-minute setting. What's 1/3 of that that also divides into 405? A 9, and then you get a 3 and a 1. These are the settings that you're going to use if you're going to day trade the minis. The 9-minute your wide angle view of the market for most of the day, 3-minute is the dominant cycle, and when you're ready for the trade, use the 1-minute chart. That 3-minute ratio gives you the zoom lens effect. Any questions from anybody? Excuse me. If not, then let me remind you of something. This big surge that we've been having has created more volatility. Now, kind of like Goldilocks and the Three Bears, you want it just right, not too hot, not too cold. Well, volatility can be both a good and a bad thing. You want enough action in the market so things don't stay stuck. But too much volatility means the average size of the bar you're trading gets too big, and if that's too big, so is the risk. So we want to be able to, if the 1-minute setup bar that we use, and I'll be using that in my example this evening, if that bar is too big for the maximum risk that our system allows, we don't want you to miss trading opportunities. So we switch over to other types of charts. Now, how many people have ever heard of tick charts? Just type a quick yes if you've ever heard of a tick chart. If you haven't, it's okay. I'll be real quick and simply say instead of time and price, it's more like volume or the amount of trades and price. So if after, let's say, 144 trades, the bar is finished, the next 144 trades, when they are all done, the bar is finished. So there's no element of time. If things are moving really fast, that bar can finish in a few moments. If the market is very sluggish, it could take a minute or more. So that's how tick charts work. And that gives you many, many more trading opportunities than you will get just on a 1-minute chart. How many opportunities do my students get? Typically at least 6 to 8 or 10 or more a day, and that's on one market. If you're following a few, like all 3 of those indexes I mentioned, well, then you're going to have more trades than you can possibly take. So I just want to reassure you, okay? Now, you're looking at these screenshots and you're saying, I don't know what's on there. Can you explain that? I will when I get to the actual live charts. But one thing I want you to know, since this is a trend following system, I get a question all the time. Michael, how will your system make sure that it's a trend and keep me out of chop and congestion, because I get killed every time I think the market is moving and I didn't realize that it's really in some kind of congestion or trading range. Will your system protect me and warn me away, keep me out of trouble? Yes, the TradeSafe system will keep you out of that. First of all, it has 2 methods of notifying you. One is visual, and that's in the screenshot below. I'll explain it in a moment. And the other is audible. Let me talk about the audible first. Your computer will actually talk to you. It won't make some dumb sound. It'll talk to you in plain English and say things like NASDAQ 1 minute change of trend, or Dow congestion, or Russell congestion breakout confirmed. This gives you explicit information about what you've got going on, so that if you've lost the trend and you're in congestion and you don't have that basic trend agreement, you don't want to sit there and watch paint dry while the market's in congestion. You can either switch to another market and see if it has some trend agreement, or you can get out of your chair and stretch and exercise a little bit, or maybe go fix a sandwich, because you can listen to your speakers. They will call out to you and beckon you back to your chair so that you'll know, okay, it's time to pay attention. And you will hear my computer when we go to the charts. It'll be talking to us during the trade. All right? So every time there's any kind of change in trend or congestion, it will talk to you. It'll tell you whether there's a breakout, a fake out, and so on and so forth. Now, visually speaking, you can see down below quite a lot going on. There are 2 things I want to point out to you. First of all, the trend indicator lives at the bottom of the chart. Those colors, the green color and the salmon pink color, are basic, brain dead. It's an uptrend, it's a downtrend. What about when there's spaces in between and there's no color at all? That's when there's no trend. That's when you need to be not taking a trade. So it will clearly show you on each and every chart. And by the way, if you've got markets that you are trying to monitor and you're paying attention to one market and another one is hidden, maybe it's minimized, you'll still hear those audible alerts. You'll know if it's time to go pay attention to that other market and bring it up on your screen, okay? But you'll see down below if you're in a trend or not. Now, what is that rectangle that's superimposed over the price action? Well, it is basically a visual aid that the algorithm is using to calculate the conditions for when you're in congestion. It is not showing you when you're in congestion, because obviously it extended further back into the past when we were in an uptrend. And there were periods when you can see that it was still going on when we were in a downtrend, and so on and so forth. What it's there for is simply just as a visual aid to let you know when to anticipate possible breakouts. For example, I'm going to move my cursor and show you right here, price is starting to move out of that range of what would have been a congestion zone. All right. It started out, but that wasn't actually when we got a confirmed breakout. The confirmation didn't occur until this bar, and that's when the color occurred. That's when you'd hear your computer talking to you, telling you that the NASDAQ chart on such and such a time frame, for example, is now in a confirmed breakout. And then if it goes back into congestion, which it did right there, you can see the color dropped off and there's no more trend. So you have a bona fide method that will automatically update itself. You don't have to lift a finger. If it goes into congestion, breaks out, fakes out, or maybe even moves its trading range a little higher at a different plateau level, it'll do that for you. Everything is handled. So you will always have a clear signal about when it is safe to start looking for a trade. Now, beginners focus a lot on entries, but professionals know the real money is made getting out of the trade. So what about getting out? I've already mentioned that you don't have to guess where to get out because it's automated. For example, you see that screenshot over there on the right? This would have been our entry from right above that bar's high. You would have entered right there. And using a particular exit strategy called scaling out, where you would take some money off the table. In other words, take off part of your position at a predetermined target. Real easy to reach target. That pays for the trade. Then after that, boom, your trailing stop indicator, that's those blue dots, will move your stop for you automatically. And then the market will take you out of the trade. You don't have to guess where to get out. Here is where the market came back down and hit that trailing stop indicator, and that's where you got out of the trade. So you got the meat off the bone. These exit strategies are predefined. They're based on how strong is the trend. It's not enough just to have that color. Oh, it's an uptrend. Remember I gave you the 3 chart settings, the 9, the 3, and the 1 if you're trading the minis? Well, depending on how many of those charts are trending in the same direction, you've got extra strength or not that you can depend on for follow through. So strength of trend is actually a thing. It's not just enough to know that you have a trend. You need to know, is it a strong trend or a weak trend? Using a baseball metaphor, if the wind isn't at your back and you got a lousy pitch, you'd bunt and get on base. Okay, the equivalent would be you'd scalp. You'd get in with your full position, hit a quick and easy to reach target, maybe after a few ticks. It's all predetermined. And then get out automatically. You don't have to lift a finger. But if you got the wind at your back and it's right down the sweet spot, you'd swing for the fences. You want to be able to stay in that trade as long as possible. That's where scaling out will come in. So we've got 3 separate exit strategies. Each one is calculated for the strength of the trend, and I'm going to show you how to determine that strength of trend. In just a few more minutes, I'll let you know how to take that and add that to your chart settings so you'll be able to start doing that yourself. But what you won't have is that automated trailing stop that's built into our system. It'll adjust itself in real time. So with this TradeSafe system, with all this predefined exit strategies based on strength of trend, you get the highest possible probability for achieving consistent returns, highest possible amount of winners. Let's face it, the real holy grail is not some rocket science indicator. It is just simply consistency. You want to have a real dependable result in your returns. Isn't that true? Okay, so let's look at a theoretical 9-minute chart trending upward. A 3-minute chart, maybe in its own little universe, is trending slowly downward, kind of meandering a bit. And a 1-minute chart in its world has just begun an explosive rally. These charts are not in sync. What you really want is, optimally speaking, all of them to trade in the same direction, trend together. But you're not going to get that very often. So I'm going to now share with you the same formula that I give to my own students in the TradeSafe system, so you can play with it yourself. Now, to help my students remember it, I've got a mnemonic, as it's called. That's simply a rhyme, and it goes like this. The minimum is the 1 and the 3 need to agree. Best is if all 3 agree. So if the 1 minute, and that includes the tick charts if you're going to enter on a tick chart, if that's trending up and so is the 3 and so is the 9, you have the potential for a huge price move. You want to take advantage of that follow through. You want an exit strategy that keeps you in the trade as long as possible. That's the scaling out exit strategy. So I did mention, didn't I, that you don't get all 3 of them trending together that often. Now, you might see it a few times a day, depending on the market you're trading, but most of the time, you're only going to see maybe 2 out of the 3 trending in the same direction. So what do you do if you don't have the 9, 3, and 1 trending together? Well, you need at least 2 of them trending together, and that's the one you enter on and the next higher setting chart. So that'll be the 1 minute or tick chart as well as the 3-minute chart. If that's all you got, you have the potential for at least something you can trade. It'll be a weaker, briefer price move, but it is something you don't want to stick your neck out and try to swing for the fences. You want to use a scalping exit strategy. Get out pretty quickly. All right. Now we have all these predetermined in our system, and as I mentioned, it is automated. So knowing all of this, what do you think you can reasonably expect to make? Now, you may have seen in some of our promotional material that you can average around 2 to 4% a day. Some people say that's impossible, because what does that really work out to? Well, I'm going to walk you through how we arrived at that number. We're going to stick to the example of the indexes, the minis, and so they're measured in what are called contracts. So if you are a small retail trader and you can only afford to trade a couple, maybe 4 contracts at the most, you will need to trade at least $500 account size for each contract you trade. So if you trade 4, you need at least a $2,000 account. But you don't want to do that because you'll be trading with your back to the wall. If your first trade is a loser, you won't be able to trade 4. You can have to drop down to 3. So I recommend trading with more capital than you need. Trade with at least a $5,000 account. More would even be better. So that's still not a lot of money for most small retail traders. It's a heck of a lot smaller than $25,000 if you're trying to trade the stock market. Or if you're a position trader, that's another universe. You're dealing with some really large size margin requirements. So knowing this, how do we come out with that 2 to 4% a day? It works like this. If you were to just trade one market and you take a trade every time you get a signal and you do it all day long. Now, I said part-time trading is possible earlier, but let's say you really want to achieve 2 to 4%. Here's how it was arrived at. If you sat there all day and took every trade and you did it every day, Monday through Friday, for a month, well, you add up all your profits after deducting the losers, and then you divide that amount of money by the number of trading days. Well, typically in a trading month, that's 20 to 22 trading days. that works out to 2 to 4%. Easily achievable. And if you take 2 to 4% and divide it into a $5,000 account, that works out to the $100 to $200 a day average. Now, this is still very easy to achieve. However, there are some of you out there who you're going $100, $200 a day. Man, I need a lot more than that. Okay, if you got a bigger account, you're not going to trade 2 or 4 contracts or whatever size you're trading. Trade bigger size. I'm only pointing this out for those folks who just can't afford to trade a bigger account. But hey, what if you're a small trader and you would like to be one of those big dogs? Well, here's a real easy way to build your account safely. So I'm going to give you another freebie. If you started out with a $5,000 account and you built it up without taking any money out for a while, you built it up to a $7,500 account. That's a net increase of $2,500. If you'd been starting out at the $5,000 level with 4 contracts, you are now permitted, because you have a $2,500 increase, to add another pair of contracts. So you're going to go from 4 to 6. And if you hold everything constant, because you're trading bigger size now, it'll take even less time to reach the next $2,500 worth of additional profit. That'll bump you up to $10,000 account size, and you go from 6 to 8. And you just keep wash, rinse, and repeat and add more and more and more contracts. Now, obviously, there is a ceiling. No market has infinite liquidity. Plus, let's admit it, traders, they get skittish after they trade really big size. If they get a few losers, they start to get pretty upset. So you will find your sweet spot, whatever it is that you can build your account up to. But even if you were to examine this from a theoretical point of view, it is possible to build your account up to a 4,800% increase by the end of the year. Now, of course, that's ridiculous, and I certainly don't believe in hype. So, since that's not real, let's take a look at what is more likely, since I told you at the beginning that part-time trading is very possible with this system. First of all, looking at a calendar, instead of trading every single day during the month, why not cut it back to only 15 days? Okay, that's a little more reasonable. That leaves you some time off. And instead of sitting there all day long, maybe you just want to trade in the morning or in the afternoon because of either your preference or your job or some other consideration. So if you're cutting it back to 15 days a month and you're only trading a half a day instead of a whole day, you're not going to average $200 a day. You'll be averaging more like $100 a day. That's winners and losers combined. It's an average. Well, 15 days averaging 100 a day is a $1,500 return. Well, a $1,500 return on a $5,000 account is over 30% return on your account in a single month. And whether you've heard me say this before or not, I'm going to say it anyway. There are hedge fund managers out there who would kill to make 30% in a year, let alone in a month. And you know what? We've even beat that in a single day. That's right. So it is definitely possible. And so you probably are getting stars in your eyes and you're going, oh, yes, I know. I want one of those equity curves that just goes to the moon. Yes, Michael, I'm ready to go. Well, again, I'm going to keep doing the reality checks with you. I don't like hype. I want you to know that you and I are different. We're not clones of each other. You and I have different personalities. And since this system doesn't trade all by itself while you play golf or go do something else, it does require you to pull the trigger on a trade. Everybody has these little subconscious impulses that ruins their trades. Even if you have a perfect TradeSafe system, you can still mess it up. because you might ignore the relationship between your personality, your comfort zone, and the system as well as the market itself. Because guess what? Markets have personalities too. Some of them are very volatile, others are very sleepy. So as part of what you get in the entire program with TradeSafe, you're not just getting my system and some software. I'll show you later all of what you're getting, but I want you to know you're getting a full-blown course that includes my personal coaching to ensure your success. And at the tail end of the course, before you graduate, you got to prove you got what it takes. That's called benchmarking. Benchmarking is something that professionals do. Retail traders don't have a clue. You will be benchmarked, calibrated to the TradeSafe system, building an authentic track record by taking a statistically viable sample of at least 30 trades. This is all by yourself without me hand-holding you or anything. And you will choose which trades, even though you'll see the same signals I will, or any of my students will, you may not want to take the same trade that somebody else does for whatever reason. Maybe it's near a support or resistance level, and you've noticed based on the journaling you did in my course that that didn't work. So you'll avoid that because you know from your experience you want the best of the best. So once you're done with benchmarking, and it's a highly selective process of picking the best trades out of the mix, it is still a system. You, at the end of all of that, will meet privately with me, and we will use the spreadsheet that I give you. It's fully macroed, and it tracks all your statistics so that you will know which chart gives the best results. Maybe you do better with a 1-minute chart. Maybe another trader does better with one of those tick charts. And it also has to do with calibrating you to the exit strategies. Maybe you do better with scalping, and maybe another trader does better with scaling out. We will dial in the exact combination that works the best for you. That way, when you graduate, you will be able to go forward with a fully dialed in, benchmarked relationship to the TradeSafe system. Nobody else does that. Now that we've gone this far, I want to go ahead and segue into the actual charts. So in order to do that, I'm going to have to pause my screen. So bear with me as I switch a few things around. If you're watching the replay, of course, you're seeing everything I'm doing. Now I'm going to bring my screen back. I need you to type a yes if you can see my charts. Would you do that? Give me some feedback. Let me know you're still awake. Nobody can see my screen? Okay, thank you, Dave. Dave is going to be the spokesperson for the group, it looks like. Thank you, Dave. All right, I'm not going to give you a deep dive on each and everything that's in every one of these charts, but the reason I'm using one screen instead of multiple monitors is to prove to you that even with a laptop, you can use my system. So if you travel, you can take your laptop with you and still use my system. Although if you use a laptop at home, I do highly recommend getting a big external monitor so you don't have to squint. Now, a little quick tour of what's here. Remember I gave you the rhyme, the 1 and the 3 need to agree, best as if all 3 agree. And the trend indicator lives at the bottom of each one of these charts. This is the downtrend color. Do the 1 and the 3 agree? Yes, they do. Here's the 9-minute chart. It's the other direction. Actually, it's not. Look, right here, we lost the trend. The color green stopped. The last 2 bars show that it went back into congestion. Regardless, you don't have the same color as we do here and here. That's all you need for the simple first step to get into a TradeSafe trade. This is not rocket science, folks. I've taught an 8-year-old kid. So if you've got that color, and that agrees also over here, I could just as easily look for the trade on a tick chart. But This evening, we're going to use this chart right here for our sample trade. Now, what are these other things down below? Well, the log is just simply what it is, a log. It's recording every change of trend, every congestion, every breakout, every fake out, so that you'll know what's happened up to now. This is very important. This is your data box. Wherever I put my cursor, the readout shows not just the open, high, low, close, but it also, from my proprietary indicators, will show you the feedback you need to complete the second, third, and fourth step that must be fulfilled before you actually park your order and take the trade. So let's dive in. I'm going to maximize the window right here for this 1 minute chart. We're going to take the trade on the 1 minute chart. We do not need to keep looking at all this other stuff. It's a distraction. We're going to keep things simple. Once you have trend agreement, you're going to maximize the window for the chart you take the trade on. So let's do that. Now things are a whole lot cleaner and easier, right? And yes, we do have some moving averages on here, and I'm going to right now explain what we're looking for in the second step. I don't have great artistic skills, but I'm going to attempt to draw you what you're going to be seeing. Price is going to continue its downtrend a bit further. At some point, price is going to retrace, okay? A retracement or a pullback will be to this moving average right here. Once all these bars have plotted and the moving average catches up, you'll see that as we go into real time. This retracement is not a change in trend. It's just simple profit taking while you're in a downtrend. Think about it as a stretched rubber band that's got a lot of built up energy, and you want to catch it as it snaps back. So this is your optimum point for placing your order. So if I had a series of bars that were retracing, I want them to ideally touch that moving average when they all come together. So I'm going to draw a theoretical bar here like that. And let's pretend that's our last bar in the pullback, the one that goes the furthest. And you will know it's the furthest and the closest to this moving average, because right here, that indicator, I'm going to bring this up so you can see it better, where it says Rule 21, like right now, this bar is very far away from that moving average. It's 15 ticks away. There is a precise number that we have as a tolerance when you enter the sweet spot, that zone, where it's okay to say, okay, we are close enough. Now, of course, we'd love for it to touch the moving average, but it doesn't always do that. If it just came a little underneath, but was close enough to be in the sweet spot, or maybe it overshot, went past the moving average, but it's still close enough, that is within the second step. We also have a couple of other things that we want to make sure you use to ensure the precision of the pullback, that it's repeatable, because trading on pullbacks, it's as old as dirt. And if you've done it before, you probably have thought, that's very inconsistent. I've never gotten consistent results. Well, that's because you haven't had these tools that give you the assurance that you've reached that maximum point of excursion. So once you've got that last bar in the pullback, you want some other method other than a retracement to a moving average to give you some confirmation that it's at that maximum point of excursion, right? Well, I don't want to do the same thing. I'm going to use down here where the trend indicator lives. There's this other indicator, this red line. It's an oscillator. I'm not going to tell you which one it is because I have completely reprogrammed it. It's not stock. All it needs to get is overbought. Or if we were in an uptrend, it would get oversold. So once it gets above that line, it has fulfilled the third step. And no, we do not use that indicator to put us in the trade. Way too many people say, okay, you get in the trade whenever the indicator turns out of overbought or out of oversold. I don't do that because these indicators lag. I'm going to let the market prove itself. How? Because I want to park an order right under the low of that last bar in the pullback. We'll call it a setup bar. It's setting you up for the trade. But we still have one more step to go. We want to keep tight control on our risk. So you will, when we go to the live charts, you will actually see the risk change moment by moment as that bar grows bigger and bigger and bigger. So you will know if it's reaching that maximum number. What's the maximum? If you're scaling out, it's $100 for each contract. It'll show you in dollars in real time as it's changing instead of some idiot light. It will show you. And if you were scalping, by the way, if you were scalping, we even keep the risk a lot lower, $70 or less. Oh yeah. So if all of those conditions are met, where do you park your entry order? It's a stop limit order to eliminate slippage, and it is, whoops, well, I tried to park an order there. Let's do it again. I'm not putting a real order, I'm drawing a line. There we go. That's where the order would be parked. And how do you get in? Some bar after this setup bar is going to have to trade down through that order to trigger you into the trade. So if I were to draw the next bar to show that it did trade through it, you would be in the trade and you're off to the races and you're catching that snapback and making your money. Does anybody have any questions on the procedure before I start the trade? You can type it out while I erase these. Get rid of all of these and then we'll start up the trade. And I'll show you the automation once we're in the trade also. Okay. Now, I'm going to turn this back on. And let's see, it's already updating. You can see the bar moving, but I don't want you to wait here all night. So I'm going to speed it up to about 8 times normal speed. So that's going to be pretty darn fast. This is not how fast the market trades. We're just speeding things up to get into a setup, to finish a pullback. Now watch this bar and the next bar and the next bar as they form. As you get closer and closer to that moving average. See, we're getting closer and closer and closer. Now when I get the setup bar,
9-minute breakout reset.
Oh, by the way, did you hear that? The 9-minute just had a reset. It doesn't matter right now because and I'm going to slow things down and pause for a moment because I got a few things to share with you. All right. That audible alert that just occurred was letting you know that one of the other charts is in a condition of congestion. That's all. It was saying it was resetting itself into congestion. But here we have our pullback that I was telling you about. This is the bar that's furthest or deepest in the pullback. I'm putting my cursor on it, and I want you to look down here when I put my cursor there. The readout says 0. That means that that bar is actually making contact with the moving average. Now, if I were to have done it 2 bars earlier, look at the readout. Part of the bar that's closest to the moving average is 5 ticks away. That's too far away. Now, I'm not going to tell you how close it needs to be. That's part of the system itself. But once you're in the sweet spot, you will see that and you will know that. So we've satisfied step 2. Now that steps 1 and 2, trend agreement and pullback to the moving average are satisfied, what is step 3? Independent uncorrelated confirmation. That's this. You are now overbought. Notice that while the pullback occurred, we did get overbought. So step 3 is fulfilled. Now, how do you know when to actually park the order? Do you wait for the bar to finish? Well, if you do, the next bar may actually start before you can get your order parked. So you want to wait till the last few seconds. Down here, you've got a counter. It says there are 32 seconds left on this bar. So when I turn it back on, we will let it count down. And what I'm going to do, I'll show it to you one time right now, and I'll repeat it again. I will keep my cursor one tick underneath the low of the bar. Actually, this bar is, you may say, oh, it's the deepest in the pullback, and I could park the order. But you know what? Because I already know from this example, price didn't trade down through that order. Another bar actually went further in the pullback. So what happens if you do that? Well, you kill that order and start over and say, okay, this new bar is further in the pullback. So let's turn it back on, speed it up a little bit more, and watch for that next bar to go above this one. And watch it, see? It went further in the pullback. So if you had parked an order, and let's pause. If you had parked an order under this bar, well, you never got triggered in the trade. And because a new bar is further in the pullback, you just kill the order and wait for this one to finish setting up. You've got 9 seconds left. It's already overbought. How about touching the 21 or near it? Oh, it's still touching. It's 0. So you're good to go. So what you want to do as it's forming is keep your cursor one tick under the low of the bar, and if it grows lower, keep moving your cursor so you're always ready to do this. I'm going to show you exactly how you park an order. This is not using a depth of market DOM, DOM, or any of that old-fashioned technology. 21st century technology lets you park an order by clicking directly on the chart. Watch, I'm going to right-click, and yes, I know a big menu pops up, but all we care about is the grouping of the orders. They're right together, and it's always the last order. So you don't need to look anywhere except the last of these orders, and that's what you click on. It's showing that it's going to be a sell order, a stop limit order, 4 contracts at that price. So listen to my computer.
Order submitted.
Order submitted, and there is a graphical representation of your resting stop limit order. SLM, stop limit, sell, 4 contracts. And if you change your mind before the order is hit, click here. Order canceled. Very sweet. So what I'm going to do is turn this on, keep my cursor and have it ready to put the order in, and do it right now.
Order submitted. Order filled.
And let's pause. Like I said, you better be able to put that order in before the bar finishes, because sometimes the next bar starts up right away and you might have missed the trade. This middle line is the one that was what we saw before. Now we have 2 additional colored lines. These are orders. This one is for your target. This is your stop loss order. And since we entered with 4 contracts, there we have our stop loss order at a full maximum. You could lose $100. Well, we don't want to. Watch, I'm going to reduce that risk to how much? I'm going to put the cursor on the setup bar. Look in the data box. The risk could be as low as 45. Here's how you reduce the risk. Bring that down to 1 tick above the high of the setup bar. So the distance from your stop loss to where you would have entered, that distance in dollars or ticks is your risk. And it would be $45 per contract. That's very, very small risk, folks. Now, what about this other line? That's your target. But we're going to, because we want to scale out, I'm choosing that option out of the 3 exit strategies. I want to take some partial profit at a quick and easy to reach target. Notice how close this is to where we would have entered. If we hit that line, we're going to cash out of 2 of the 4 contracts we entered in with. We're going to buy back 2 right there. That's where it says. And we'll do it on a limit order, so there's no slippage there either. And once you've done that, then you want to trail a stop. But before we do anything else, I want to point out that these 2 orders, these 2 colored lines, were plotted automatically because I told you it's automated. It's pre-programmed. This is called an OCO, one cancels other. It's a bracket order, so that if it didn't reach the target and scale us out and instead hit the stop loss order, this one gets automatically straight canceled so that you don't have to worry about remembering to cancel it yourself. I did that when I was a beginning trader. I forgot after I finished a trade and left an order working in the market overnight. I woke up the next morning, I was underwater, and it really hurt. So this takes care of that for you. This is automation, okay? Now, something else that's going to occur when we reach that target. Your stop won't stay up here. It's going to be moved to where you entered, plus 1 more tick of profit to pay for commissions even, so that you will have, even if it reaches the target, but maybe you don't get a fill. Maybe you don't trade through it. Maybe it kisses the target and then backs away. If it reaches that same spot, guess what? You're still going to get a cancel and replace to 1 tick of profit. BE plus 1, break even plus 1 tick of profit. Sweet. You won't get that in TradeStation. You won't get that in other platforms. This is pre-programmed in the TradeSafe system. So let's watch it. I'm going to turn it back on, and I will speed it up a little bit. And then I'll pause it. Now watch what happens. You're going to see the red line get moved and the green line, target filled, said the computer. And the green line disappeared because the target was hit. Now let me pause here for a sec. Notice the stop loss order is no longer up here. It got canceled and replaced. It's now at 1 tick of profit. Well, we aren't trading 4 contracts anymore. We scaled out of 2 of them at that green line, the target. So what about the stop loss order? Notice that it doesn't have protection for 4 contracts anymore. It automatically updated itself to 2 for just the remaining 2 contracts. More automation. So this is, again, something that even TradeStation cannot do. So what are we left with? Let's see how trailing a stop works automatically. We're going to use this indicator up here, the blue dot, and we're going to connect it to our stop loss order. You got to do that by going through a little series of menus real quickly. I'm going to attach it to the indicator. And so I'll just do a drop down real quick like. And I'm going to give it a little bit of an offset so that if it touches the actual indicator, we're not really out of the trade, because based on things that I teach in my course, I already know that an offset is going to be the thing to do. So let's watch what happens. I'm going to turn this back on, and I'm going to speed it up to about, let's say 15 or 20 times normal speed. Now watch what happens when the blue dots catch up with the resting stop order. It's technically a profit stop.
Congestion canceled.
Oh, you might have even heard it. Oh, look how close price came. You probably, if you were a discretionary trader, you might have gotten nervous and jumped out. But now watch what happens. Every time one of these bars finishes, I'm going to pause for a sec. Every time a 1-minute bar finishes, a full 60 seconds, remember I was on hyper fast, one of these dots is going to get plotted a certain distance away from it. So every time a bar finishes, that's what you get. And then this trailing stop indicator itself will tell the stop, hey, back off, buddy. Give me a little bit of cushion here, 2 ticks away. So we're going to do that. Now, the nice thing about this indicator is it will adapt and adjust itself to several factors, things like momentum, trajectory, and so forth. It'll be like a surface-to-air missile, adjusting its rate of closure and so forth. So watch what happens. It'll hang back when there's plenty of movement moving strongly downward, but if price starts to stall or even backfill, it will rush down and lock in the profit. So keep an eye.
Not in. 9-minute. Breakout confirmed.
Okay, on a different chart, unrelated to this trade, we are also getting that. Now let's watch and see. See how we're going sideways and it's getting closer and closer? Well, it even made contact with the actual indicator, but we have a 2-tick offset. So I want to re-engage it and say, hey, let's keep this thing going. I like that. I want it to be automated. So let's keep following it. Now, what I just did is actually maybe 1 in 200 to 300 times of trading that you would ever do that. But it gives you additional control. Normally, it's totally hands-free. Now watch, we're getting very close to being stopped out at a profit, of course. Price is really close, but it's going to drop more. And there.
1 minute. Trend loss.
Now watch what happens.
In. 1 minute. New congestion.
Did you hear that? It said 1 minute, new congestion, and look, the box appeared, showing that we lost the trend right there. There's no more color. We got out. We took the trade way back here, got in, exited half of our position at a quick $50 profit. It paid for the trade and then some. And then we trailed our profit stop automatically all the way down, and it knew to get out as close as possible to when that trend was just running out of gas. That is automation. That is a true mechanical system. So let's see what we made. Let's open up the chart trader hidden panel on the right. You may not be able to see it because it's covered up by your GoToWebinar control panel, but I'll just quote what it's saying. The profit here is $820 on that trade. So I have a question that I'm going to ask you, and it's a real simple question. This is an automated system. The only thing you got to do is decide whether you want the trade or not, and then turn it loose. If you like what you see with this kind of precision and the possibility to adapt and adjust to what the market can give you, other trades would be simple scalps. You'd be all done in just a few moments. This trade took a while. It took, from 1425 to, oops, sorry about that. When did it finally get out? Oh gosh, it took almost 30 minutes. That's a bit long for the average TradeSafe trade. The average TradeSafe trade is 15 to 20 minutes. So my question is, knowing that you have this kind of precision, automation, and flexibility to adapt to what the market can give you, let me know if you like what you see. Just give me a little bit of feedback and let me know if you think that this is something that will finally take away all of that discretion and subjectivity. Let me know if you like what you see. Type a yes. Yeah, Dave likes it. He says, this looks good. All right. So what I'm going to do now, I'm not going to keep you all night. I'm going to go ahead and leave the charts and we're going to wrap things up here. I'm going to go back to the presentation. And let's do a quick overview of what we've covered. This system is a trend following system. It's very safe. It is probably the most profitable thing you've ever encountered as far as consistency and dollars. It uses multiple settings on your charts instead of a one size fits all. It uses multiple time frames, as I call them. They're tuned based on cycles to what each market is. And I've already shown you a formula for arriving at the settings for whatever market you want to trade. I also showed you how to adapt and adjust to what the market can give you based on how many of those charts were trending together, up or down. That enabled you to be able to trade exactly what the market is capable of giving you. And all the while, you will never ever lose a lot of money when you do get the occasional loser. The most you can lose on a single contract is $100. Typically, it's less. I didn't even go into it. We didn't have time, but I want you to know we do not use a fixed amount of stop loss. It's a variable stop loss. If the bar is smaller, then the risk is smaller because the distance from where we were above the top of that bar for the stop loss to where we entered a tick under that setup bar, if the bar would have been smaller, you would have risked less. In fact, how much was I risking? $100? Nah, I was only risking $45 per contract. And how much did I make? $820. I'd say that's a pretty darn good reward to risk ratio. You saw the automation as the trade unfolded. That's all because from start to finish, this is a true Boolean logic, mechanical, rules-based trading system, just like that flow chart. This takes away all of the guesswork because you get total precision getting into a trade. You got to look for the step 1 trend agreement. The 1 and the 3 need to agree. Step 2, pull back to the moving average plus or minus X number of ticks, and you will always know exactly what that is because you get accurate readout. You get independent, uncorrelated confirmation from your oscillator, overbought or oversold. And finally, you keep your risk under tight control. Those simple 4 steps give you total consistency in your returns. And I give you a roadmap to make sure you can do this repeatedly. I offer you a full-blown course. Now, I'm not going to ask you to read all of what's there, but think about it as if you were going to high school, freshman, sophomore, junior, and senior. As you graduate from each level to the next, it's an online course, plus you get coaching by me in my trading room. I prefer to call it a coaching room. And you do not have to type your questions. You use a headset or the microphone in your computer, and you can talk to me in the middle of a trade and say, why did you do that? I don't understand. And I will help coach you through any problems you have. In fact, I do something nobody else does. I can watch you take a trade. That's right. I can coach you through problems you're having. I'll watch you try to park your order, take the trade, get out of the trade. Nobody else does that. I do it. I give you the assurance that you're doing things correctly, all the way through to the end where you get benchmarked and build your own authentic track record. Now, this looks like it's going to take 90 days. No, it doesn't. It's far, far from it. It takes only a few days to learn. I can teach an 8-year-old kid, I said. But the reason I give you 90 full days of my personal coaching and support in the trading room is because I want to watch you trade for a while. I want to teach you far beyond the system. I want to equip you with the kind of tools I've learned in 25 years that we're going to give you as a bonus on top of the system so that you'll be at the level of a professional trader. So that's why I offer you far beyond just, okay, let's get you up to speed in a week or so and turn you loose. I want you to be able to hold your own against professionals so that you're not low on the food chain. That way you can actually start cashing in on the current economic post-COVID explosion. So let's walk you through what you get in this package. First of all, I mentioned before that this is a true mechanical system. You know what? There are only maybe 6 or 7 of them out there in the wild. You've heard people call their stuff a system, and I bet you probably refer to your own style of trading. Well, this is my system. This is what I do. You know what? It ain't, because it's not a true Boolean logic automated software based system. That's why there are only about 6 of them in the whole world. This is one of them. And the others that are out there, they start at about $3,000, and they don't have any of what I'm going to show you. They start at $3,000 and go well past $10,000. Don't worry, we're not going to ask you to invest that kind of money. So let's keep building up some value here. Next, you want me to be your personal coach and mentor. I'm available to you both in the coaching room as well as offline. Nobody does that either anymore. I do it. I just got through spending a full hour with one of my students earlier this afternoon, coaching him through some questions that he had that just couldn't wait until the next time we were in the trading room itself. Now, when I consult with corporate clients, I bill at $500 an hour. You get me for the full duration of 90 days worth of support. And if you decide that after 90 days, maybe you want to come back for a tune-up, or maybe you ran out of time because something interrupted you from finishing things within 90 days, guess what? You can still get all of my personal attention and be in my coaching room for just $47 for a single month. And you get to pick how long that is. Maybe 1 month, you want to go 2 months, go ahead, 2 months. And guess what? You can do this for life, not my support, but the tools, the software, the actual members area. Everything that you're going to see here is yours for life. You don't have to pay another penny to keep having access to it. So that members area, you've got all the training tools that you need that are in there, both print versions, instructions, as well as training videos. And that's a really solid value. Plus, when you set up your charts, you don't want to have to reinvent the wheel. Wouldn't it be nice if you just had to spend a 5-minute easy installation with pre-configured templates and workspaces? Yeah, I give that to you. But let's say you're not as confident as you think you were and you need some help. We'll extend a helping hand. We have a full-time support desk. I'm not a one-man band. I've got a full staff. And you will be able to have my guy remote access into your computer and assist you in completing the installation of the TradeSafe software. So don't worry about it. Now, you saw my trend indicator that talks to you in plain English and gives you the visual and audible alerts, and it's there on all your charts, whether they're visible or they're hidden. That's part of this package. You are getting the 4 simple steps getting into the trade. You saw each of the proprietary indicators, putting them all together. We got even more value. And then I gave you one of my 3 exit strategies and demonstrated the automation. All of that is easily worth a couple of $100 or more. Now, when you go into the benchmarking phase before you finally graduate, my average student racks up around $3,000 to $5,000 worth of profits. That gives you a strong indication of what kind of money you're going to be making. And that's over 30 trades. Okay? That's all I ask. Just give me 30 trades, and this is what they typically generate. Now, when you are in my coaching room, my trading room, I record everything. That's what you're seeing on the screen, what you're hearing me say, what you're saying to me, the other students, and if I see somebody else's charts and show theirs, it's all archived. You can go back years if you want to and learn from previous sessions. That's available to you also. So from there, I want you to be able to, when you graduate, run your trading like a business. So I give you a true business plan, not just to map your financial goals, but you need to put guardrails on things. Let's face it, if you're a day trader and you get 2 or 3 losers in a row, you're going to probably fall in one of two categories. You're either going to freeze up and get analysis paralysis, and it's hard to take the next trade, can't pull the trigger, or you're going to jump in and maybe take the next and the next and the next, and you might just dig a deeper hole. We want to put guardrails. We want you to put in writing, and that's built into this business plan, what's the maximum amount of money you are willing to lose in a single day or a week or a percentage drawdown on your account. And what do you do if you have X number of losers in a row? I read every single business plan that my students complete and give them feedback. Nobody else does that either. So, to keep running it like a true business, you want to be able to journal each and every trade so you learn from the losers as well as the winners. Don't be one of those traders who jumps from trade to trade and you don't know why things work. You want to journal them. I give you a pre-formatted journal so that you will learn from each and every trade. That's what the professionals do. And to make it run like a business, you need statistical feedback. I give you that fully macroed spreadsheet. But last but not least, none of this is going to work unless you follow the rules. And you know what? Probably the last frontier in trading is trading discipline, trading psychology, people who just don't follow the rules. They either overtrade, get analysis paralysis, or whatever. Guess what? Remember, I used to be a psychotherapist. I have an extremely powerful tool that will neutralize that self-sabotaging behavior and turn you into a trading machine. So if you add all of this up, wow, we've got almost $11,000 worth of real value in this entire package. Of course, you're not going to be paying anything close to that. Instead of that, what I normally have had people pay, and they have told me it's worth it at double the price, they normally pay $39.95. And that's still cheaper than any of the other true systems that are out there. And they don't have everything that I'm offering you. But I'm not going to ask you to even do that tonight. Instead, I'm going to give you a very special offer, but it is a limited time offer. It's good until midnight Pacific time of Wednesday of next week. After that, it will go back up to $39.95. What is it? I'm going to slash it in half. I'm going to cut it down to $19.97. That's for everything you've seen. And if you're really ready to get started, you've got a lot of questions, I know. You want to know if you're really the right person. Is this a good fit for you? Can I really afford to do this, Michael? Well, you want to book a consultation. I told you at the beginning of the presentation that you're going to get a follow-up email, and it'll have links in it. One for the replay of what you're seeing right now, and you can also have additional link to see my scheduling calendar. And as I promised you at the beginning, I don't twist your arm or pressure you in any way whatsoever. I'm not a salesperson. I'm the developer. I'm the coach. I want to just answer your questions and provide legitimate consultation to help you be a better trader. So you can make up your own mind if you really think this is good for you. And I know you still, some of you see that 1997 and you're kind of flinching. I promise you, it isn't hard at all because I offer you payment plans so that as you go up the learning curve, you can take bite-sized chunks if you need to. I'll explain one of the best ways to do it in just another minute. So you will not be pressured to do this tonight. I'm not going to say you got to do it now or you lose it forever. That's what those high-pressure guys do. I'm going to give you a solid week. So please do schedule that consultation with me. Get your questions answered. And if you want to jump to the head of the line, here's how you do it. You copy this link down. Unfortunately, you can't click on it, but copy this down. daytradesafe.com, that's my website, /apply now. If you put that in a browser after we're done here tonight, it will take you directly to my scheduling calendar so you can pick the best date and time that works for you. And I will set aside a full hour of my time just for you, and you'll get reminders, etc., etc. So what happens during that time that we visit? Well, don't wait, because it does fill up fast. First of all, I want to promise you that I will honor that discount, even if it filled up and you couldn't find a slot until after next Wednesday. Oh, don't be disappointed. I will still honor the discount as long as you made a good faith effort to schedule time with me. You got to call me, though. I don't call you. You'll get a reminder email, plus make sure that you provide your cell phone number, because I'm going to send you reminder texts so that you keep that appointment. And please do keep it, because remember, I know you got a lot of stuff on your plate and you probably look at 30 of these webinars a week, but at least respect my time, if not your own. I'm going to set aside all that time just for you, not to pressure you, but to answer your questions. It'll be a really valuable conversation, because I want you to come away with complete confidence. Now let's talk about these payment plans, because some people say, well, yeah, I can afford to pay it all up front, but I would rather not. The one that I recommend is PayPal. Here's why. When you click on the link that you'll eventually get that lets you go to the page that lets you join TradeSafe, there are two PayPal buttons. One of them is to use PayPal to just go ahead and use them to pay, or use your credit card through them. But there's another PayPal button. That's the one that's called Bill Me Later. It's a credit thing. It's this. What it'll do is it'll take you into their portal, and it'll do a soft credit check. Takes a couple of minutes is all. And if they like you and your credit is good, unfortunately, you do have to be a U.S. citizen. This, for my Canadian friends, sorry, that's a PayPal policy. If it were up to me, I would definitely encourage you. But PayPal says no. But if you're a U.S. citizen, you really owe it to yourself to give it a shot, because here's why. They will give you a full 6 months to pay them back. And unlike a credit card, they won't charge you any interest during that time. If you pay them back by the end of 6 months, 0 interest. That means you've got free money to use for 6 months. That lets you finish the course, get up to speed, and start trading real money, and start paying yourself back for what you did to enter this TradeSafe course. So I recommend that. Now, if for some reason it's not a good fit or you're not qualified, we do have other in-house payment plans, and yes, I do have to charge interest. So please do book a call. We want to talk this over. I want to answer all your questions. There's that link again, daytradesafe.com/apply now. And again, if it goes past Wednesday before you see me, I will honor the deadline. You'll want to pick the best date and time that works for you. It fills up fast, no sales pressure, and please do watch this replay at least once before you call me, because if you didn't see the whole thing, or it's been a while and you've forgotten what you saw, I want to be sure that you at least remember what you saw. Okay, so watch the replay, and that way we can have an intelligent conversation, because I can't recreate a webinar over the phone. So finally, before we wrap it up tonight, we're all done now. One last thing. There is often one special person in the room who says, I am ready to go, Michael. I don't even need to talk to you. I really want to start using this system immediately. So if you want that, copy this link down, daytradesafe.com, like before, /I want in, all one word, I want in. If you do that, it'll take you straight away to the order page and allow you to join TradeSafe without even scheduling time with me. So I want to say thank you for taking time out this evening. I really appreciate you watching all of this. There's that link again for scheduling time. I'm going to give you another 30 seconds if you've got one final quick question. So type it out if you've got one quick final question. And I'm not going to look at my watch. I'll just remind you that, once again, my students all by themselves, every single graduate achieved at least 87% winners. I've had many of them exceed 90+%, almost 100%. So that's how accurate this system is. And you're getting my personal attention. Well, thank you, Dave. I appreciate it. And I guess that's it. Nobody else is typing anything else. I'm going to wrap things up, and I'm going to encourage you to go ahead and schedule time with me at the very least. And until then, trade safely, everybody. Bye-bye.